Well, let's get in a couple of commodity strategies then. Naveen Mathur of Angel Commodities joins in for that. Naveen, all your strategies today, can you take us through them?
Yeah, thank you very much. I think the gold and the silver prices may look to be positive today on the technical charts and the fundamental reasons. We saw the Swiss bank yesterday bending a 3-year cap on the pegging of francs. So I think the bond yields and the stock markets across the globe have taken a turn on the downside, which may appeal gold on the technical buying and as well as the safe haven demand coming in. We did saw the prices touching approximately $1261 levels yesterday, but as of now they're trading around $1257, $1258 level. Indian markets too, the markets are trading at around 27,500. We would recommend the buying to go in at around 27,400 or so, with the stop loss recommended for this trade at around 27,250 and targets on the upside in a range of around 27,600 to 27,650. The silver also looks to be positive because the precious metal has taken an upside turn. Although they are down today by $3-4, but then I think for some days, at least for next 2 or 3 days, we may see the upside continuing. I think that silver buying can be initiated at around 37,700 levels, stop loss at around 37,300, and targets on the upside in a range of around 38,600 to 38,700 levels. Base metals and crude, we are bearish. Selling strategy would go in for the crude. Although the markets are stabilizing for the Brent at around $48 levels and the WTI is at around $46, $47 levels, but the kind of pressure which we are seeing from last couple of months, I think would let the prices consolidate at around $45, $50 levels. I think the global economy, the way the GDP projections have come in from the World Bank 2 days back, also had an impact on the prices of both the base metals and the crude oil, and hence we did saw some kind of a downward trajectory. But I think would stabilize at these levels, and our strategy would be to sell the crude oil contract on the MCX for the month of February at around 2,970 or so, with a stop loss at around 3,050 and the targets in a range of around 2,870 to 2,880 per barrel. Copper also will go short at around 355, 356, stop loss at around 359 and targets to the downside at around 342, 348 or 347 levels.
All right, Naveen, thanks a lot for your time today. That's commodities.